Trump will monetize gold's value. That's a piece that we did. We read an article in Grants. We took a section of it and we extrapolated on ways that Trump can or will monetize gold's value. And there's a little bit of a history lesson there too about how it was handled before. $3,000 and higher. MUFG, they did a really nice commodity report, and in that they think $3,000 is not a problem, which is echoing Goldman, which actually I think they came out before Goldman. BOA on gold and silver, tug of war in 2025. That's really a well-balanced title. It's really mostly about silver. $38 is their target for silver, but that's modest. And Bank of America, I think, has a lot of big silver business.
Gold and precious metals markets are experiencing significant attention from analysts and industry leaders, with various price predictions and policy discussions shaping the narrative. Veteran commodities trader Vince Lanci has highlighted a team analysis examining potential Trump policies on gold monetization, drawing connections to historical gold policies and future scenarios. This discussion comes alongside MUFG's $3,000 gold target, which reportedly preceded a similar projection from Goldman Sachs. Gold maintains stability above $2,600, though buying momentum remains subdued. The market faces competing forces. Geopolitical tensions and trade war concerns support gold as a safe haven asset, while the Federal Reserve's hawkish stance and resulting USD strength act as limiting factors. Wheaton Precious Metals CEO Randy Smallwood projects gold reaching $3,000 per ounce by 2025. His optimistic outlook is based on several factors, including robust central bank purchasing activity, positive ETF inflows, and interest rate policies that accommodate growing debt levels, all of which point to sustained demand for the precious metal. In the silver market, Bank of America forecasts a dynamic interaction between gold and silver in 2025, particularly emphasizing silver performance. The bank has set a conservative target of $38 per ounce for silver, though Lanci suggests this might be understated given Bank of America's substantial market involvement. Recent market activity shows silver experiencing a slight decline, with FX Street reporting a 0.26% drop to $29.60 per troy ounce from $29.68. Despite this short-term dip, silver has demonstrated strong performance, with a 24.39% increase since the beginning of the year. Kitco's analysis suggests silver prices could reach $36 to $38 per ounce by 2025, driven by growing industrial demand and an improving gold-silver ratio. Before we dive deep into this video, make sure to subscribe to our channel and hit the bell icon so you never miss any of our updates. Also, share it with your friends and anyone who might benefit from it.
Fort Knox holds nothing but moths and IOUs. That's relatively new, and it's actually very current. People are talking about that concept a lot more. Do they have the gold or not? Zoltan's Gold again deconstruct, and this is from 2022. One of our first really big posts when Zoltan was writing publicly, semi-publicly. We were breaking it down for readers. This post is relevant. This analysis is relevant because it's happening. Everything he said in this post about gold, rehypothecation shrinking, prices increasing, crisis in commodities in general, shortage of collateral. We took his arcane language and broke it down. It's long, but it's very thorough, and I would say that everything he's saying is happening, as most of the bigger picture things he has said over the past. It's just not happening as fast in terms of price as you would want. And I think just a quick comment about that. If he was writing about it, they knew about it. If they knew about it, they were thinking about how to mitigate it. So it's just going up. It's just not going up on overnight. Next story there, special Trump will monetize gold's value. That's a piece that we did. We read an article in Grants, and we took a section of it and we extrapolated on ways that Trump can or will monetize gold's value. And there's a little bit of a history lesson there too about how it was handled before, etc. $3,000 and higher. MUFG, they did a really nice commodity report, and in that they think $3,000 is not a problem, which is echoing Goldman, which actually I think they came out before Goldman. Anyway, it's very good. It was very popular. BOA on gold and silver, tug of war in 2025. That's really a well-balanced title. It's really mostly about silver. $38 is their target for silver, but that's modest. And Bank of America, I think, has a lot of big silver business. You want to look at the markets. Gold is higher, silver is higher, copper is higher, but we're not talking about rocket ship stuff. Now, even if the stimulus or the trajectory of the stimulus keeps getting higher and higher, but that's because their problems, at least financially, keep getting worse and worse. And by that, I mean their 10-year bond is headed towards 1.5%. It's like 1.6, 1.7 now. And as long as it stays under 2%, here's a rule of thumb for you. Someone asked me about this yesterday. Uh, as long as the China 10-year bond stays under 2%, you should assume they're not out of the woods. They actually need to inflate. You're like, well, they're printing all this money. Where's the inflation? Exactly. People are taking their money and putting it into bonds. They're taking their money and they're putting it into gold, and they're not putting enough money into stocks. Meanwhile, the rest of the world's pulling its money out. Stimulus will help gold, hurt bonds, and help stocks. It'll help gold a little, not like it used to. It'll hurt bonds a lot. It should, and it will hurt. It will help stocks if people believe in it. If not, it's the whole Japan lost decade trajectory that people are looking at. Anyway, there's more going to come. I think they're probably doing a little bit less right now because I think the Fed might not cut anymore. Anyway, that's the only market news that I'll bring. There's a lot of other negative things that went out there, but I just wanted to share that with you.
In his latest market analysis for 2025, Vince Lanci examined Citibank's 2024 performance review and 2025 projections, highlighting the report's pragmatic approach. Additionally, Lanci commends MUFG's comprehensive analysis and suggests sharing exclusive content with founders to provide deeper market insights. The gold market outlook for 2025 maintains cautious optimism, with analysts still targeting $3,000 despite potential early-year challenges. Market experts anticipate sustained high gold prices throughout 2025, supported by continued central bank acquisitions and geopolitical uncertainty driving safe haven demand. Meanwhile, silver's industrial applications could drive its performance above gold's in the coming year. Current projections indicate gold prices reaching $3,070 per troy ounce by the end of 2025, representing a 16.2% appreciation from present levels. Silver generates even greater optimism among analysts, with forecasts targeting $36.90 by year-end, suggesting a 21.7% increase from current prices. These predictions reflect growing confidence in precious metals' performance as both safe haven assets and industrial commodities. Let's get back to the video.
Citibank has a 2024 recap and take for 2025. It's very good. It's not completely euphorically bullish, and I think it's very realistic. But everyone's on the bandwagon now. Just keep that in mind. MUFG, I alluded to this before. It's a great report. I like it a lot. It's different visually when you look at it. It's kind of like an old school report. Very busy pages. Everything's on the page, but you can compartmentalize it very well. It's a good report. And we have a little treat that we normally only share with founders. This is about a little over a week old, but there's a couple nice articles in there, and it's great long form reading, and it's not something that we would ever share publicly. So we're only going to be sharing an excerpt of it. For founders, we've been asked to contribute a chapter to Jordan Roy Burns' book at the Daily Gold on gold. And he asked us to write a chapter on de-dollarization, and we wrote a couple thousand words on de-dollarization for him. We'll be adding some pictures to it as well. His book will be published soon. When we know that, we'll let you know. If we have a copy of it available, we'll share it with everyone. But for founders, here's the piece that we wrote in advance. It's not the in-depth type of wonky piece that I like to write when I get into these things, but I think you'll find it very accessible and probably something that passes around the table if people are asking you in the family gatherings, what is de-dollarization? This is probably going to nail it for them. Gold. Seasonality, we're in bull season, and that's kind of holding us up, actually. Not to be bearish about it, but we're in the holiday season. I think everyone, all the macro discretionary guys, I'll give you the last 3 weeks. Macro discretionary took their profits after the election. Boom, right? CTAs and commodity guys puked. boom, right? They knock it down. Okay. And then the macro discretionary guys also who had also been selling, leading, this is all them selling in here, right? Someone's buying and they're leading into it, right? And then the election happens and they sell. Now we go sideways. Macro discretionary is still slightly long, and they definitely have their eye on gold. And so for the last 2 weeks, they turned to Bitcoin. They go, oh, everyone's talking about Bitcoin. Let's put our money in Bitcoin. It crosses some moving averages, hits some psychological numbers. And so now they're ostensibly out of gold, which is bullish because look at where we are, right? So you have the macro discretionary has gotten out of gold and they haven't destroyed the market. Here, I mean, look at this. Those boys got in here. Okay. They started getting in October, and then they got in a much bigger way, I would have to say, in March. On March 1st, they started to get in right there, right? And that's where the China effect started to happen. So here we are, all the way up here. Macro discretionary is out. They've turned their attention to some other younger chick, right? They're looking at how it goes up, and gold hasn't sold off, despite them not playing, despite CTA pukage, which we talked about. And so here we are in 100-day moving average. Can we go below it? Yeah, we could. You wouldn't want to get too excited about this market unless the RSI goes with the move, right? There's other things to look at. But this is where we are right now. The moving average has served us well over the last 2 months since the election. We're in it, we're going sideways. We go below it, be careful. But remember, it's copper gets sold, silver gets sold, gold gets sold down. On the way up, it could be silver leads, gold follows, and copper drags. That's really the way it could be.
Gold is expected to maintain strong prices through 2025, supported by continued central bank buying and rising safe haven demand amid ongoing geopolitical uncertainties. While silver holds the potential for greater growth, mainly driven by industrial demand, gold remains a key asset, with forecasts predicting significant price gains by year-end. As global economic and political dynamics unfold, gold's position as a store of value will likely continue to strengthen, reflecting broader market confidence in its long-term stability. Do you think gold will continue its upward trend in 2025? Or could we see a market correction on the horizon? Let us know your thoughts in the comments below. We'd love to hear your take on it. If you enjoyed this video and found it informative, make sure to like, subscribe, and hit the bell icon to stay updated on all our latest content. Thanks for watching, and see you in the next video.